I
And
know you're
you?
watching what I'm watching, right? When you see these yields creeping higher, you got an inflation print today, but markets have been at records. What is the takeaway here? What's it all telling you?
So listen, there are records, but today clearly we saw what happened, right? Markets are weaker other than the Dow, which is kind of flat at the moment, but the other three indexes are under a little bit of pressure. And this is part of the conversation that, we've been having over time, is that what 10-year rate is going to cause some repricing in the markets, and at what pace does it happen? Does it shoot up? Because then you're going to get a reaction that's much more severe. If it's kind of slow and steady over the next 6 months, maybe not so severe. You might get a pullback, but not necessarily a swift and painful one. And so I think that's kind of the tone. The market also feels a little bit heavy to me. I've been talking about it in my note for a couple of weeks now, and I think that we're at the point where every attempt to move higher is just a little bit less robust, right? So the market just feels like it needs to take a breath and is looking for a reason to really want to back off. And today it may get some of that reason as we look at weakness in the S&P and NASDAQ and the Russell, with the Dow just kind of trading flat.
Right. So you say we're taking a pause, not a collapse, even though, right, second day that we're seeing the S&P selling off. So is this the type of pullback that you say, hey, I'm going to pick up a little bit of some of my favorite stocks? If so, what would be some of the first things you would buy on a dip here, like what we're seeing?
So I don't necessarily think down 1/3% is the dip that I'm really looking for. I've actually been much more aggressive. I'm kind of hoping that we get somewhere between a 7 and 9% dip in the broader market. That would be kind of what I'm really looking for. Days like today, where we're off 1/3%, are not the kind that say, oh, wow, I got to jump right in and buy this dip. I don't really consider this a dip. That being said, the names that I like, and we've said this before, is, look, and they're all down today just because the market's down, right? JP Morgan and Bank of America, which are two names I told you in that space that I really like. Both of those names have broken out. They look like they want to move higher. Rising yields will certainly be good for them. An improving economy will be good for them. And as a long-term investor, those are names that I own. Those are names that I like. And on a bigger pullback, those are names that I will add to. I like the XLF.
I agree with you, by the way. Yeah. Right. I agree with you, by the way. I mean, I shouldn't have even called it a dip because, I mean, 1/3% is nothing. Right. I agree. Right. I fully agree. Right. Once you start moving more than 5%, and that's when you really start to see some action, and when you start to see a pattern too. I mean, this fluctuating back and forth, and is sort of a go nowhere fast, to kick the can down the road, searching for direction. So you do like the XLF, which is some of these bank names. You also like Bout. Tell me about that. BOUT.
So Bout is an IBD, Investors Business Daily, right? Investors.com. It's an innovative fund based on an analysis that they do about stocks that are breaking out, stocks that are going to outperform. It has done really, really well. BOUT is the symbol. And if you look it up, and you'll see it's done really, really well over the course of 1 month, 3 month year. It's up 18% year to date. It's up 34% in the last 3 months alone. And it's got really interesting holdings in it. If you look at some of the holdings that are in there, there's Generac, there's Crocs, there's Logitech, there's Etsy, there's Trade Desk. And these are all names that IBD identifies as stocks that are outperforming. And if you follow this particular ETF, it has done a very good job at kind of allocating their assets and its performance. Today it's down like everything else, so you can't look at it today. But if you look at it broadly and you like the idea of stocks that are breaking out identified by IBD, this is a great way to play it.
So Bout, it really is break out.
Break out.
Right? I mean, that's basically what it stands for. Tell me about some of these other names in the tech world. Are you a fan of technology or non-FAANG? I mean, are there certain names that you like in tech? Because everybody wants to invest in tech still, right?
And listen, and tech is great, and you need to be in tech, and you need to be in artificial intelligence or cybersecurity, because that's absolutely kind of where it's going, right? So you want to be in front of the curve, not behind it. Look, there's nothing wrong with some of the FAANG names. I own Apple. I own Microsoft. Those are two of the FAANG names, and I like them, and they'll always be kind of a foundational holding for me. But outside of that, and we've talked about this before too, whether it's its cybersecurity names, right? You can play that through that hack ETF, which gives you a broader exposure to kind of that sector, right? So if you don't want to pick a single name and you want broader exposure. In the artificial intelligence space, in that space that connects the Internet of Things because of the way we all live and work today, those are still names that I like. They're outside of the FAANG names. They are within the technology world, and they will provide opportunity.
Yeah, yeah. Good stuff there. Also, what's your thought on Bitcoin? Because today, Anthony Scaramucci, who I know, I'm sure you know him, of Skybridge, and all the money that first of all, he said, be cautious. He put all the caveats on there, like be careful. Oh, but by the way, I have an enormous amount of money in Bitcoin and think it could go to 100,000 by the end of the year. And so I did like that he said, be cautious. He was trying to be frank. And he also said, look, I have this money invested. I mean, it's public knowledge. So it's a 50 plus. What do you think? I mean, 100,000?
He started a Skybridge fund, which now you can invest in it, right? A Skybridge Bitcoin fund, which I know that he's getting out there. Look, I was always anti-Bitcoin. You know, a couple of years ago, I didn't really believe in it. I didn't think it was going to catch on. But I have now done more work on it myself. I've learned more about it. I'm paying attention to what's happening in the world with it. Certainly, it's getting a lot of adoption. I think last week when Bank of New York, the oldest bank in this country, came out and said that they were going to support the custody and the transfer and the holding of the asset, I think that was a real shot in the arm. And then you had Elon Musk, talk about, investing 1.5 billion. Who's going to be next?
So
Jeff
you're
Bezos.
A believer.
Yeah, absolutely. And
you're a believer that it's something. It's something. What about Visa and American Express?
And I like Visa and American Express because that's kind of the recovery story, right? American Express has already broken out, and now it looks like it wants to move higher. Today it's not because the market's weaker. And Visa appears to be setting itself up. Visa has to trade up and through 220 before I'm completely convinced, but I'm going to keep my eyes on it because that's the level where once it hits 220, if it breaks out, that would be the opportunity. If you want to try to jump in beforehand and try to ride that wave, go ahead, but I'm waiting for that pattern to complete before I jump in.